The AI trade has powered markets for nearly 2 years now, fueling trillion-dollar valuations and reshaping entire sectors from semiconductors to cloud infrastructure. We hit the streets to get Americans' take on AI and how it affects their lives.
Are you afraid of AI taking your job?
I think AI is coming and it's going to be used in ways that are good, but also possibly ways that are harmful.
I do see where it's being supplemented for things, writing emails, writing proposals and contracts. So I could see other people in my organization where it goes towards it's taking away their statement of work.
We kind of just have to work with technology and use it to better our own business.
I think that it's getting too smart, too quickly. Everybody uses it too much. And I personally don't. I try to minimize my use in general.
Now investors are asking whether we're in the middle of an AI bubble or still just scratching the surface of a long-term growth story. To break down the next leg of the AI trade, we're joined by Dan Ives. He's back with us, Managing Director and Global Head of Technology Research at Wedbush Securities. Gargi Chaudhuri, BlackRock Managing Director and Chief Investment and Portfolio Strategist for the Americas iShares. And Eric Jackson, EMJ Capital Founder, President, and portfolio manager. And guys, something I'm struck by as we heard those folks on the streets of New York, and also I'm sure in all of our conversations, is how concerned normal people are about AI. So there's this fascinating disconnect to me between what we see in the markets, where there is huge investment and enthusiasm, and the real trepidation that people have about how this transition is going to unfold. Gargi, as you all think about your investing strategy around this, how do you think that informs what the transition is going to look like?
Sure, Julie, it's so great to be here. Thank you for having me. And I think just listening to that dialogue and then also thinking about how clients of ours are talking to us about AI. So for example, we just did this survey with People and Money, and 19 million Americans are actually thinking about investing in equity markets in the next year or so.
Who haven't yet,
or many of them have not yet. And a big driver of that is the AI sentiment, this mega trend that is shaping earnings. It's shaping, to your point, a huge amount of earnings growth over the last couple of years. And we think at BlackRock that this is something that is flowing through not just into flows, which is happening, but also into macro data. So it's the macro growth is impacted by earnings. Real GDP in the first half of the year, about 1.1% of that was driven by AI, but also in the micro in terms of earnings, in terms of IG issuance, in terms of how we're thinking about infrastructure and private credit. So this is definitely a powerful force and a tailwind in many ways.
Dan, we know that you are a big AI proponent, obviously, and as you talked about, you think we're sort of still relatively early on in the AI party, so to speak. I'm curious how you're thinking about the investing case for the enterprise versus the consumer when it comes to these AI applications going forward.
I mean, right now it's all about enterprise in terms of the AI revolution. I mean, that continues to be ultimately where the growth is. And I think consumer ultimately is going to come in 2026, 2027. But this is about the enterprise in terms of this AI revolution, from Nvidia to Microsoft to Palantir. This is an enterprise-led AI revolution first, then the consumer.
I think Dan's got to go back to his shot where he had the beautiful trees in the background in Miami. We're having a little bit of trouble with your shot, Dan. But Eric, I want to ask you about Nvidia specifically. I know you've been an Nvidia bull in the past. Obviously, Nvidia has been incredibly dominant in this build-out phase of AI. Do you think that dominance is near peaking as we sort of move towards the application part of AI?
Well, they're gonna. You need both, and so they're in the driver's seat, and they will continue to be for many years to come. I mean, obviously they'll have the AMDs of the world nipping at their heels, and everybody will say, well, we're coming out with the next great chip. But Nvidia has this 25-year head start over everybody, and so they're going to move just as fast, if not faster. And so we've got Rubin coming, and the next generation of chips after that, and there's nobody better positioned than they are to continue to lead. So they are a necessary component. The apps are also a necessary component of what's to come in the build out. So both will succeed.
And I know that you're focused on sort of stocks that are very specific where you see a lot of upside. But do you think that there's also a case to be made for investors? Do you just buy the whole basket of everything that touches AI, or do you think it is better to have sort of these very targeted bets?
Well, I think just as an observer, there's been a lot of skepticism around Nvidia, for example, and so almost from the moment that the ChatGPT 3 came out, 3 years ago now, there was sort of this knee-jerk that, the way to play this is not Nvidia, but it's to play the catch-up trades of like the next set of chips, and that's been terrible advice. And so I think a basket I would not suggest for most investors. I would say you want to pick the winners within every little niche of the overall AI stack and go with those leaders.
So Dan, I want to go back to you on this then, because we know that you, again, are bullish on quite a number of these different names. Let's say, what if you had to pick one, right? What if you had to pick one stock in 2026 within AI? What's it going to be?
Tesla. Because, this is the AI chapter that's now going in for Tesla. Musk is wartime CEO. Autonomous robotics is going to be the next step. I think Tesla is ultimately a double over the next 12 to 15 months. That continues to be the name that I think, especially when it comes to a name that investors are underestimating what this is going to look like. To me, it's Tesla, and obviously followed by Messi of AI, Palantir.
Eric, do you have a view on Tesla or Palantir?
I love them both. I think they're both great companies. Alex Karp had an amazing interview just on the network, just in the last half hour. It was riveting to watch. But they're both huge companies, and so like you said before, I like to kind of play for some of the smaller plays. And even a company like Opendoor, you'd think, is that an AI company? But think about like what they are trying to go after, and there are going to be so many stories like this. They're trying to revolutionize how we buy and sell houses, and move away from an agent model to one that's purely like AI led. And so what will that look like? Well, they in the summer, they had 1,400 employees. Keith Rabois, who's now the chairman of the board, has said, we want to fire 90% of those people and replace them with AI. So we want to totally rethink the entire real estate transaction process, AI led, including like home inspections, including like AI, what do they call it when you sort of frame your house, you sort of do up your house and make it look best. That's all staging. Yeah. AI staging now is a huge thing. Huh. So it's going to be interesting. Like that's just real estate, but every industry is going to be revolutionary.
And Julie, I'd also add, the bullishness of colors on this panel. Jackson's dressed a little bad. No, he's dressed a little bearish. I expect
Dan, this is how Canadians dress when they want to look like Dan Ives. This is as flashy as we get up in Canada. Okay,
We've all tried. I think.
We're sort of complimentary here. I think all of us equal Dan shirt is what's going on today. Gargi, I want to follow up to you on something that Eric just talked about, which is those layoffs, right? If there is going to be this disruption, right, and it seems like the more progressed it gets, the more it looks like there is going to be labor disruption. There's also some maybe cyclical labor disruption under the surface. So, okay, we have this great AI future. Who's going to have a job to have money to spend on this great AI future? If I don't have a job, I'm not paying, as Max Levchin was just talking about, I'm not paying an AI agent to buy my groceries or spending that money. So how do you think about that?
Julie, and I think we heard that when we, before our segment started, when we heard from people across the street, if you will, there is that concern around my job is going to get taken away. But if we take a step back and think about where we are from an economic cycle perspective, unemployment rate, at least the starting point, is very, very strong. And I think we have to take solace in the fact that the consumer is in a very good shape right now. Unemployment rate, we haven't had the picture in a while, but based on what we see, it's still a strong labor market. And as of now, the small impacts on the unemployment side is coming through for a very specific cohort. Now, we've seen revolutions like this in the past. I mean, there were people that entered things by hand in stores and in companies, and then you had the computer come in and replace all of that. What happened? People had to get retrained. It took time, and at the end of it, we had a more productive economy. So I don't want to diminish the fears that people have about getting replaced by AI. I do think it's something that you are palpably seeing, but at the same time, I want to point to two things. The research so far shows that if you're using AI to augment your skills, you're likely to be in a much better place than if you weren't using AI at all. So for those that are not using AI, I would say make sure that you're using it for augmentation of your current skills. And the second is be invested in this AI revolution, whether that is through equities, whether that is through private credit, whether that is through infrastructure. Make sure you're a part of this, and then have a voice. Have a voice in the process. There's going to be hopefully regulation around this, making sure that your voice is heard within the process.
Yeah, I love that idea of like hedging that you could potentially lose your job or have to shift your job by investing in some of these AI companies. That's a really intriguing prospect. Going back to some of the specific companies and this sort of universe that we have, I find it intriguing that Dan's picks, or for that matter, Eric's picks, aren't as leveraged to OpenAI, which is seen, obviously you all know there have been a lot of questions about the centrality and circularity of OpenAI and its position in this whole ecosystem. Dan, let me send it to you first, how you think about that, whether you think it's a risk, and what you made of maybe I don't know if it was a Freudian slip or what it was by Sarah Fryer last week of OpenAI, who talked about a potential government backstop, and then sort of the company had to kind of walk that back.
Yeah, and I think they've walked that back, right? Look, I think the reality is like OpenAI is foundational to the AI revolution. And I think everything that they're doing, from the Nvidia stakes to AMD to Oracle, you're building out what essentially is the new economy for consumers and enterprises. So I don't view, look, the circular issue, I'm not as concerned about. It's not like a vendor financing late 90s situation. For every dollar that they invest, they're getting back $12 to $15. So in my view, OpenAI is going to be a core foundational successful piece. I do not worry about the too big to fail concept in terms of where this is all heading.
What about you, Eric?
I think there's been so much noise, and haven't we learned from, especially Tesla and Elon Musk, how many times has the world been sort of offended, at something Elon said? Remember, he said something to Bob Iger. He's in 2018, we thought it was going to end when he tweeted about 420 to taking it private, and the show goes on, and Tesla is the story is what matters to investors. I think, there's people have been complaining about what Sam Altman said on a podcast. It doesn't matter. We were just talking before this segment about using ChatGPT to find like an amazing restaurant in New Orleans that we never would have, discovered before. There's like what we get out of this technology is really what matters, not the personalities, not the. I mean,
it matters a little bit, but you have other choices. If you don't want to buy Tesla because you think that Elon Musk is not a particularly stable leader of the company, we've been talking about a lot of the other choices that you do have.
I mean, there are always competitors, but there is no other Tesla. There is no other Elon Musk, faults and all. And there is no other, I think OpenAI is just an amazing company. It's got drama with Sam and Elon fighting and tweeting at each other and stuff, but the product is amazing.
Eric, my call continues to be Julie will be in a robotaxi in 2026. That's my call.
Not a Waymo, a robotaxi?
You're in I think a robotaxi, 2026.
I don't know. We'll see. I don't know about your call that you've made to us before, though, that we'll all have robots in our homes in the next couple of years. I'm not quite ready for that, especially since the robot on the market right now, which is not made by Tesla, still is controlled by a human. No, thank you. Not getting that one in my house. But be that as may. Gargi, I'm curious how you think about OpenAI and the web that we have seen created here. And also, not just on the equity side, but on the debt side, some of the creative vehicles that we have seen to finance some of these projects?
Absolutely. And this is a question that's been coming up a lot from our clients. I will point out that we just did a poll yesterday in one of our client calls, and 66% of about the 1,400 clients that had joined are still very bullish, but that obviously means that there is a cohort that is getting concerned around valuations, and they're questioning, is AI in a bubble? And a lot of it is around the circular financing point. So maybe two things to remember here. One is, to the extent that the majority, 52% of the hyperscaler capex that's taking place is coming from cash flow and it's not coming from sort of leverage, I think that is something that we can feel good about. And then of the total capex, about only 12% is going towards these smaller neoclouds. To the extent that that remains the case and you're looking at massive profitability, maybe the circular financing, to Dan's point, this isn't new. We've seen it in this space before. It's not as concerning when there is revenue and EBITDA associated at the end. However, obviously, if we look at the number of neoclouds that are doing deals and are doing capex going from 12 to 15 to 50, I think that is going to be something that will raise more questions around circularity of AI. And I'll also say that's probably a risk in terms of, is there a perceived demand that might not actually be there because you're not exactly sure what's hiding what. And that is a risk that we need to be aware of.
Well, Eric, you like some of those neoclouds. We talked about them earlier, Iron, Cypher. CoreWeave, by the way, those shares have been on the wane a little bit. I don't think that's one of the ones that you hold. So how do you figure out, when you're assessing some of these companies, how do you assess the risks, the potential risks that we're talking about?
Use ChatGPT. I mean, you got to do your homework, and you got to. I mean, and we laugh about it, but like, there has never been a better time to be an investor and leverage these AI tools to figure the answers to the questions.
Guess what? Those AI tools are not infallible. The stakes are low when Gargi's asking you where she should eat in New Orleans. It's a little bit higher when you're trying to figure out where to put your money.
That's what separates like the good investors from the bad investors. You know, somebody joked with me the other day that like kids today should be majoring in prompt writing. You know, that should be your major. You want to do something practical. How do you write a prompt? It's sort of garbage in, garbage out.
Yeah. And it's the data that you feed it.
Right.
You're getting the output from the data that you're feeding.
Well, most of the data that ChatGPT is using right now is from the internet. So that's data is uneven, shall we say.
Well, and I mean, the good investors know when they're being kind of led. You can smell a rat, like in some of the answers that you get. And so, well, no, I don't trust that. You know, you're wrong, ChatGPT. How about, do it this way and do it that way? It's the follow-ups. And so, I mean, that's the exciting part, though, is that, like, the world is your oyster, I think, with these tools. But you're right. Like there's a big difference, I think, between a CoreWeave and an Iron Cypher. CoreWeave is sort of stuck in the middle between the hyperscalers. They said, like, hey, we want to be this asset light, company because we think it'll get a great, multiple from Wall Street, and then we don't have to buy all the necessary, real estate underneath and build the actual data centers, and that'll be rewarded. Turns out they're getting disrupted because they don't control these things that their whole business is sort of based on.
Right, and then I saw today like Bitfarm, which is a Bitcoin miner, is now transitioning over entirely to AI and data centers, which is something we've seen more and more of. Thank you guys. I wish we had more time.
It's been a massive year for artificial intelligence, reshaping markets and the global race for tech dominance, and few companies sit closer to the center of that transformation than Palantir, whose software powers decision-making from Wall Street to the U.S. government. And here with me now is Palantir's CEO, Alex Karp. Alex, great to see you.
Great to see you too. We've been at this for a long time.
Many years, my friend.
Many years.
Let me start here. Question for investors. Maybe it's the biggest question for investors right now. AI boom, Alex, or AI bubble? A lot of smart people have different views on that. I'm curious to hear yours.
Well, I mean, first of all, it's always interesting to define what it means to be smart. But so if smart means informed, I think the debate comes down to two questions. How large is the market? And how large is the market for things that actually work? So there's really two AI markets from Palantir's perspective. people using AI, call it enhanced intelligence to do basic things, but things that are not sophisticated enough so that they would change your revenue or margins. That is a very large market. One could argue as an informed citizen that market is very large, but may not create enough value to justify the actual cost of large language models or their implementation. What we see on the ground, not as an opinion, but as like a fact, is a subset of that larger AI market. I would call AI that works either in a way that it can change the battlefield, or it can change your margins, or it can change your revenue. And by the way, can do it in a way that's so quickly that you can do it in the public sphere, so you can do it as a public company. You don't have to inherently take the company private, although you can do it in the private context, or you can do it so quickly you can change things on the battlefield. That portion of the market, so the subset of AI where you can show quantifiable results, again, life and death, safety results, or results so that margins or revenue actually change dramatically and quickly enough so that you can capture the value while you're still running the company in the structure as it exists now. So it used to be, to do these things, you had to essentially isolate an institution. I want to rebuild my military. I want to rebuild a company. I want to change the trajectory of my private company. The timeline on it and what you would have, the violence involved, meant that you had to take it offline for 5 years. Okay, that's a really, and sometimes you still have to do that. What the special thing about the category we're in is you can do all that so quickly that you can show quantifiable results. And that portion of the market is expanding as a subset. So if the whole AI market is here, this was a tiny subset. That is metabolizing the rest of the AI market. And so what we see on the ground is the people are very, very receptive under the condition you can show it having worked in a similar environment somewhere, anywhere on the globe. So the part of the market that is weak, that where people talk about a bubble, is in the institutional context, so not consumer internet, where you cannot show the thing having worked. That part of the market is very weak and dissipating. Now, the part of the market we're in, which is we'll show you the results quickly and we'll get paid a subset of it, that part of the market's getting bigger and bigger and bigger, and that part of the market is going to dominate the rest of the market in the institutional context.
Let me ask you this. So you're describing where Palantir is today, Alex. Help me understand where, you think about where Palantir could be 5 years from now or 10 years from now. And one way to think about it is that, you sometimes talk about, Alex, how AI will define the future of warfare. So let's say you talk 5 or 10 years out. I'm interested how you think about what the future battlefield will look like and what Palantir's place on that battlefield could be.
Let me kind of invert the question and say, where will America be? Because I think we're downstream from America's success. America is the only country in the world that provides everything from chips to ontology, above and below. One country. So the question is, can we grow the aggregate GDP, and can we grow the subset of GDP that affects working class people? Because that's essentially the challenge we have. We're in a unique environment where we probably can grow aggregate GDP in absolute terms, meaning GDP that affects you and me. And now we have to, can we grow it in a way that positively affects the welder, the plumber, the truck driver? So this is the core challenge for America. And then as a subset of that, because in a weird way, our ability to defend ourselves, or our need to defend ourselves, is going to depend on our economic strength and our military strength.
And how does AI play into that?
So first of all, something that we just have to say over and over and over again, we forget in this country, we're the only country in the world who has every part of the stack where the dominant feature of that stack is built in our country. So this is completely unique. So we have a very different problem than, say, Europe has. Europe has the problem that they don't have any part of the stack as a dominant player. Now, so the advantage for us is we have a very plausible narrative to growing our economy. The disadvantage for us is we have to show we can grow the economy in a way where the average person with a skilled job participates. Now, so how does AI happen? It depends what you mean by AI. Again, if you mean AI that you're just going to be running some query, that's very hard to see why GDP inherently grows. It's also hard to see why the plumber, the welder, the truck driver has a better job or the job they have today, but gets paid more tomorrow. And if you're doing AI the way Palantir is actually doing it on the factory floor, on the battlefield, and in corporate environments all over America, you can see that what we're doing is we're taking the welder and saying, oh, we can make you into the kind of welder that can work in a complicated environment that you could not have worked in the past. We're taking the truck driver, presumably, and saying, hey, if we reroute you this way, you're more efficient, you save energy, you actually know how to repair your truck or predictively chair, and so you are a more valuable engineer. And arguably, the most important thing is we're equipping warfighters with lethal technology that is substantially above what our adversaries have, which means our adversaries don't want to fight with us.
Do you see that remaining so in the future? The U.S.,
the danger we have, honestly, in this country is just, like so many of the crazy debates we have in this country are downstream from, we have a bounty of riches. And like our issue is how do you manage that? Like it sounds like an easy problem, but just as an example, if Europe had one of these things, it would be very good at protecting it. We have so many of these things, people think it's automatic. We're automatically going to win. We can afford these internecine invites. My personal view, maybe not, I'm not saying those of everybody, we can't afford open borders and complete delusion that we can get away with a non-meritocratic society. Most of that comes from the left. But it's like, if we can't get away with diverging from our unique heritage, which is particularly valuable, like free speech, First and Second Amendment, an ability to defend ourselves. These things are especially the fact that we attract and retain the best entrepreneurs from other countries, but we already have many of the best ones here. So like every other country is scrambling to get something to work. Our problem is actually different. This problem, can we stick to the hand we have? We've been dealt a blessed hand. Are we going to screw it up? Now, and that's really our problem. Like, are we going to so regulate AI so that somehow it's easier to do it somewhere else? Are we going to eviscerate concepts like meritocracy? Because, it is like partly because, now this is where Silicon Valley could do a better job. People are nervous about meritocracy because they think it's meritocracy for me and like an oligarch for you, right? So it's like, no, it's like, does this work for everybody? Is a real, or most people, like, are we going to have a society where people believe that tomorrow is better than today? Or are we going to have a dystopian set of views because people think it's only working for Silicon Valley? What does it look like to navigate foreign environments? Can we be honest about successes and failure? I mean, can I get any progressive I know to admit that President Trump has done an amazing job in foreign policy, especially on Iran? And especially on the border.
Well, it feels like we've come to the part where I think a lot of Americans right now, Alex, on that point, I think sort of feel like I'm for kind of reflexively whatever my political opponent is against. We're in the unique environment where we've been blessed with the most important resource in the world currently. Call it the ability from chips to ontology, like above and below. Obviously, the two most valuable things are kind of the chips and ontology. They're both here. But yes, it means we have to get out of our parochial little niche and start evaluating things on the issues. Like the bounty of riches that we have, it can be a huge danger. Like, do you know what I spent half my life in Germany. Do you know what Germany would do for our tech scene? Any country in Europe, any country in the world? This is no other country has this. And by the way, it's incredibly hard to replicate because it's not, people want to believe, including in the Valley, it's like some pure IQ. It's not, it's like a way of organizing things, a way of doing things, plus IQ and other attributes. And this is somehow in this country, if you're like me, you're like, yeah, our Constitution was given to us by a higher power. We have a special role in the world.
Some people don't believe that. But, there's a lot of evidence for what I believe, including this whole conversation. And then the real question is, do we screw it up? And yeah, we could screw it up.
Let me ask you this. In this AI discussion we're having, investors have clearly determined, Alex, that Palantir is an AI winner. Your stock has soared. I talked to some analysts who cover Palantir. I want your reaction to this. And I'll ask them, you cover Palantir, why isn't Palantir a hold? And here's what they'll tell me. They'll say, I like Karp, I like the company, I like the tech, but it is too pricey.
Okay, great.
It's too expensive. We're at nosebleed levels. What do you say to that?
Great. How often have you been right in the past? That's literally my question. My question is...
That would be your question to the analyst.
No, I'm not going to engage on your prognostications of the future if your record... By the way, this is... As much as I like to bash analysts and as much as many deserve it, it's really... There are analysts who... I think some of the analysts say that. I think some of them say, look, I was wrong in the past and now I'm looking deeper. So it's one can't generalize even about analysts. But I would say all sorts of people who have, let's say, all sorts of people that have negative attitudes towards Palantir, or broadly defined. The quote-unquote analyst who's like, nosebleed level valuation, the quote-unquote journalist that says we're powering the surveillance state domestically, the quote-unquote person that says I'm a conspiracy, the quote-unquote person, I don't know, there's all these things. In every country there's a negative Palantir meme. What I would say to any one of them, and by the way, not just on this issue, there's persuasion and being right. One of the most important things you have to ask yourself is, how often has this person been right? And that is more important than, is it persuasive? If you, analyst, journalist, politician, if they've been right on 5 out of 6 things, and they say a 7th, I think one should assume they're likely to be right. What if they've been wrong about all those things? And by the way, where I do have a bone to pick with like traditional financial people, including their minions, the analysts, some of them, not all, is, do you know how much money you've robbed of people with your views on Palantir? Like, it's like they have all these views. There's no downside risk for their view. At what point, it's like, it really should be next to every statement. I said don't buy Palantir at 6. I said don't buy Palantir at 12. And the welder, plumber, technician who didn't buy it or sold too soon, I owe them money. And by the way, let me tell you something about Palantir that is very positive. By my reckoning, Palantir is one of the very few, if not the only, where the average American bought and the average sophisticated American sat on the sidelines or sold.
Why do you think explains that?
Yeah, because the average American was a lot smarter than they were and listened and was not bigoted, was not held down by a whole set of training beliefs that were wrong. Like, what does it mean to build enterprise? What does it mean to have FTEs? What does it mean to go to market? What does it mean to get paid? Does your enterprise have to be parasitic? Should it be a parasitic? Should the host essentially be paying for the privilege of making your company larger and getting no value except for a weird feeling that you get from the parasite that you're better than you are? It's like essentially replicating the whole woke mind virus in the enterprise. They were open. By the way, they were also not only, they were not bigoted against some obvious truths that we've been saying for 20 years. By the way, these views when they were not popular.
Like what, Alex?
Like America is a better way to organize and live than any other place in the world. That even though it's better, we shouldn't be exporting, or especially it's better, we shouldn't export. We don't need to export our values abroad. We need to be strong enough in America so that nobody screws with us. Including my views on the border, like we should have an actual border, we should have an actual culture, we should have meritocracy, we should not tolerate discrimination, and discrimination means against white males or whatever that is. We should build the best products. The products are going to have to be much better than any other products in the world, or they're not going to get implemented. All these things we've been saying for 20 years, and you know what? They pissed off a lot of people in the elite. You know who they didn't piss off? The same people we're also making AI work for. The truck drivers, the plumbers. I run into people all over America and quite frankly all over the world. People who have like normal means who are now rich because of Palantir. You know who's not rich because of Palantir? The people who read the analyst notes and the people who wrote them. And you know what? They're also still kind of angry because while they're cruising along in their broken down car, the person cruising next to them in their beautiful Tesla is an actual worker in this providing actual value who may have gotten rich on Palantir.
By
the way, I love that. It is nothing makes me happier than looking in my mind's eye at the bank executive who's hanging out with their thing, who's living on the drip of some high interest loan, watching some person who's free, American, riding their car, who did not go to an elite school but knew enough because they didn't probably go to elite school to buy Palantir shares, and now are going to make even more money using our platform.
Let me ask you this. I want to end here. There is a book coming. I want your view on this. It's a biography of you, The Philosopher in the Valley. When I read this book, is it going to be a fair, balanced portrait of Dr. Alex Karp?
Well, I mean, only be fair and balanced if everything was good. Look, it's 70% accurate. It's very.
What's the 30 that's not?
He's got Trump derangement syndrome, obviously.
How does that come out?
Like anything that Palantir's done, it's basically 2 books. It's one book about my childhood, which is a complex background and, came from nothing and highly dyslexic and amorphous. It's like the whole thing, amorphous background, a little bit too amorphous racially, a little too Jewish, a little too very dyslexic, political. That part's fascinating. It's a little hyperbolic, but it's like 85-90% true. Mm-hmm. Then, of course, the Trump derangement syndrome. The fact that President Trump did these courageous things in Iran, and closed the border, and Palantir's played a role in these things. Obviously, not the role that the people did the work or the president, but that just sets off this mind virus. So Karp has to be evil. It's that part of the book obviously is but it's so obvious that you can kind of read through it. And yeah, there's some things, but I guess it's a good read. I think people read it will say, oh, wow, that's really interesting. There's some things about Alex I didn't know. And, you can assume all the things you don't like about me are on the inaccurate side, and all the things you do are accurate. But I think a lot of people are going to read it. I think people will enjoy reading it. Since we're talking politics there, final question. And we've been talking for a long time, the two of us, years. How have politics changed in Silicon Valley as you've watched it? What's the arc been like? And how has that, if at all, impacted the defense tech sector? Well, I mean, I'll tell you, the thing I get in most trouble for in my intellectual circles is the following statement. Silicon Valley, like the rest of the world, will listen to you if those ideas make you money. Now, of course, you still have to have convincing ideas that are true, but if those ideas are not tailored to real world things that work, in the Valley, quite frankly, is dollars, they will not listen. The fact is, and again, whenever I tell this to my intellectual friends, they stop talking to me because they want to believe that pure ideas change the world. Pure ideas don't change the world. I'll tell you what changes the world. Pure ideas backed by the military, in this case, hopefully the US. Doesn't mean you have to use the military. If you're strong enough, this is where I'm Palantir is not a neocon project. Our project is to make America so strong we never fight. That's different than so almost strong enough so we always fight, right? So your ideas get listened to if you are dominant on the battlefield, and hopefully so dominant you don't have to use it, but if you do use it, people are like, yeah, I'm not screwing with those. Or if those ideas make someone a lot of money. You still have to have the ideas. In part, the intellectuals get so angry, my intellectual friends, it's because they just think they write a book, someone reads it, and it changes the world. Nuh-uh. And that's not the way intellectual projects have ever worked. The ideas have to have a real world input. And so the fact that Palantir is at whatever we're at, this changes the Valley, because not only was the patriotism right, but the patriotism will make you rich. And that's what that impact on the Valley is going to be very long lasting. And I'm very proud of that. But again, you can't just be proud of the idea. That was right from the beginning. It was been right since the history of our country, that our way of organizing, especially our Constitution, is superior. It's certainly superior for Americans. Again, superior for us doesn't mean we export it to everyone in the world, but superior for us since conception. But to make people listen up in their seats, you need to be dominant on the military and dominant on the economy. And Palantir plays a really but-for role in both of those areas. And that's something that I'm proud of, because not just because of the impact, but because the way in which it reverberates both in Silicon Valley and outside. And by the way, it also stands for, anyone can make it. One of the things that's in the biography is, read where I came from. Read that. There's no reason you can't advance in this society. And that's an important lesson for everybody, especially outside the Valley.
Welcome back to Yahoo Finance Invest. I want to hone in on two of the hottest stocks on the Yahoo Finance platform right now. That's Nvidia and Tesla. And joining us now is resident bull on both names, Wedbush analyst Dan Ives. And Dan, you were supposed to be with me here in studio, but I heard even though the government shutdown is over, you might have had a little plane trouble and you're stuck in Miami down there?
Yeah, stuck in Miami. Actually, it's my second time in Miami in this week. I thought I'd be lucky to get back, but it looks like it's going to have to wait a day.
You're a busy man. We know this. I'm sure it has nothing to do with how cold it is here in New York City, but I have a lot of viewer questions for you. Before I get to that, I do want to ask you your 30-second bull pitch for Tesla and your 30-second bull pitch for Nvidia, because I know you're very, bullish on both of those names.
Yeah, look, on Tesla, this, in my opinion, is the most important chapter ever for Musk and Tesla, the AI chapter, autonomous and robotics. I think we're talking 2-3 trillion in terms of market cap, best physical AI play besides Nvidia. When it comes to Nvidia, the godfather of AI, there's only one of them, and that's Jensen. Look, demand to supply is 10-1 for Nvidia chips. Get the popcorn out, get the watch parties out for next week's earnings, because this is, in my opinion, is going to be a $6 trillion market cap in 2026. And again, the bears will continue to yell from hibernation caves. They'll be wrong.
All right, they'll be wrong. You heard it here first. But let's get to some of our social questions. And I want to start with Tesla. One social viewer asks, Tesla seems to be a show me story with investors all in on robo-taxis and automation, but that seems years away. How much patience does it take to be a Tesla shareholder?
It takes a lot of patience. And we've talked about it so much, on Yahoo and on the show, because this is when you have to have the understanding of what Musk and Tesla are trying to do here. They're building out the AI future. Autonomous, they're going to own 80% of the autonomous landscape, in my opinion, over the next decade. Robotics, Optimus, that's what you're playing for. It's less about deliveries. It's more about the AI future. You have to be patient, but it goes back to this, in my opinion, is going to be the most important chapter ever in Tesla's story.
All right, another question from our audience here, Dan. You've compared the AI boom to a party before, and that we're still early on in the night. Do you have any new analogies for where we are in the AI trade right now?
Yeah, so look, it was 9 p.m. in that AI party. It's now 10:30 p.m. But that party goes to 4 a.m. And it's my view where, look, you're going to have glass on the dance floor, DJ stops playing music, but that party is going to continue rage on. The Bulls and the Bears meet up at 6 a.m. at the diner. Bulls had a lot better night than the Bears.
But Dan, my mother always told me nothing good happens after midnight. So how do you know when to leave the party?
Look, and that speaks to my view. It's all, when it comes to AI, it's all about demand, right? 3 million air miles the last 25 years. I'm always on the road trying to understand what demand looks like. I was in Asia for a month. Demand's accelerated 30% over the last 4 or 5 months. So look, I get some on the valuation, but when those call an AI bubble, they're underestimating the scale and scope of this AI revolution. And for the first time in 30 years, the U.S. is ahead of China.
All right, I'll tell my mom for the AI party you have to stay all night long. But I do want to take some time to talk about your outfit, Stan. This is something that you are known for. I want you to show the camera what you're rocking today. A lot of patterns, a lot of personality. What's the inspiration behind your style?
Yeah, look, I'll show you wearing today, right? This is...
Love it.
This is my man. But to some extent, I always have dressed in a way that it's similar to how my stock picking is. It's different, right? But ultimately, it's what I'm comfortable with, and I also, it brings color and fun to an industry where, that maybe historically hasn't been there. And I think that's also why, my clothing line, danivesclothing.com, we've sold 400 or 500 shirts out there, and, it's an exciting time. More want to get into the color and just have fun with this.
So would you say your outfit picking is similar to your stock picking?
I would say. I think to some extent it's I don't care what others think. I go to the beat of my own drum, and the reality is that it's something where I've always dressed different. That was in Korea a few weeks ago. And look, I think it's one where it also gives inspiration to others, where it's like going out of the box, but it's similar to how I pick my stocks, right? If you just looked at valuation, I always say the bears, when they're in hibernation mode, they can't see AI in the spreadsheets.
Now, I was doing some digging and I saw you have a collaboration with this fashion brand, Snow Milk. And the shirts ain't cheap here, Dan. You have $100 for a polo. I mean, these shirts are trading like some of these AI stocks. Is the valuation justified here?
Look, I mean, those are made in the USA, made in Williamsburg, Brooklyn, right? I mean, and it's one where you look, and this is something where all those shirts are handmade, right? And we'll eventually have sweatshirts and hats, and I could see Sazi wearing one of those sweatshirts soon. But look, this is it's having fun with it, right? And I think also it speaks to my view in that party at 10:30 p.m. You don't want to be wearing the Peter Millar and slacks in that party on the dance floor.
All right, well, I'll be patiently waiting for you to send me my own shirt here, Dan, but thank you so much.
Welcome to Yahoo Finance Invest. The global economy is rapidly evolving from shifting monetary policy to inflation pressures and structural changes thanks to technology. In the backdrop, record-setting markets that are sparking fears of a correction or even worse. Joining me now is Mohamed El-Erian, Allianz Chief Economic Advisor. Mohamed, a real treat to have you here at Invest. Thank you for always making time for us. Let's start out of the block here on cockroaches. There's a lot of talk on Wall Street right now on cockroaches, and this essentially is risks coming out of various places, and it's hard to stop them. What say you? Where's the next, I guess, economic cockroach to be found?
So let me just say, we will have cockroaches, but not termites. And this is a fundamental differentiation. Cockroaches are unpleasant. They come in groups, but they don't eat away at the integrity of the system. Termites eat away at the integrity of the foundation. So why are we going to have cockroaches? We're coming from a period where people have stretched really far for additional returns. They have been encouraged to do so by a strong economy, by very loose financial conditions. And some people went beyond their comfort zone and beyond their ability to do due diligence. So I don't think we should be surprised that we will have these accidents, these credit accidents. We'll have some economic accidents, but I don't think we're going to have any systemic shock.
That is, of course, a good thing. And when you mention potential economic accidents, what keeps you up at night? Well, what are you most concerned about for 2026?
So what used to keep me up was a trade war. But the US has been able to impose higher tariffs without triggering much retaliation. So that doesn't keep me up as it used to. What does keep me up is what's happening at the lower ends of the income distribution for households, where there is significant pressure. And what keeps me up is the amount of debt that has to be refinanced at higher interest rates. So those two things are potential areas of pressure, which would be made worse if we get a policy mistake.
Mohamed, you bring up a really great point. It's something I've been thinking on very deeply of late. We've seen tremendous wealth created in the market this year, and the bull market has continued, but we're not seeing it. I guess this goes to your point. We're not seeing it translate into that average U.S. household, that lower income consumer. Is that cohort of the U.S., are they in a recession?
They're near recession, and they are spreading this concern about affordability, which is not just an economic issue, it's a social and political issue. The first shock to affordability was, of course, the 2021-2022 inflation shock. But that was offset, Brian, by income transfers. Now we have inflation stuck at 3%. We have insecurity about future income. The Challenger report showed you that layoffs were surging. AI will change the workplace. And in addition, we have high debt and credit cards that have been maxed out. So there is real concern on the bottom bit of what people call the K-shaped economy. And this is not isolated concern. If the lower household incomes stop spending, not because they don't want to spend, but they're not able to spend, that will contaminate upwards for the economy as a whole.
So you think that pressure on the low end, so the high income consumer, the person that is exposed to the markets, they've enjoyed a good year, they're not immune to what's happening on the low end.
So they're doing fine. They're doing fine from an income perspective. They're doing fine from a wealth perspective. So I'm not worried about middle to upper class. I am worried about lower income households and their ability to continue to navigate this uncertain environment.
How do we bridge this gap? Because if you listen to the current administration, Mohamed, they are talking, the president has floated a potential $2,000 dividend. There's been interest in that. The One Big Beautiful Bill was passed. More jobs are being created in the U.S. in terms of tech companies building out AI data centers. Like, how do you bridge that gap between what's happening on the high end and low end?
So they also, you could have added to that list that they've moved on some very sensitive prices, gasoline being one, and the other one being some pharmaceuticals. So they are taking steps, Brian, but this has been long in the making. This is not something that is recent, and therefore it is deep-rooted. It is made more complex by two other issues. One is the difference between real and perceived, and the other one is the difference between relative and absolute. So it is a really complicated issue, and if you go through it, the bottom line is it will take years of effort, both on the income side and the price side, to get us out of these situations.
I want to leave enough time in this conversation, Mohamed, because you are known as a foremost thinker on Federal Reserve policy. It has been quite the year for all things Federal Reserve, of course. Attacks from the Trump administration. We're coming up on the end of Chair Powell's tenure. Where is your head at as it pertains to the Fed in 2026? What is a new Fed chair? What will they bring? And where do you see the ultimate end game for rate cuts this cycle?
What a new chair will inherit is a divided Fed. And it's divided by two things. One is whether they are sensitive to the employment side of the dual mandate or to the inflation side of the dual mandate. Both are flashing yellow right now. So it does matter where your bias is. And what we see is that people are on both sides of this divide. The second thing that they will inherit is a division between people who are totally comfortable being backward-looking, so-called data-dependent, and those who realize they also need to be forward-looking. They need to have a strategic view of the economy, and in particular, Brian, of something you've been talking about a lot, AI and its impact on productivity and growth. So what a new chair has to bring is a unifying narrative. And I think that narrative has to be forward-looking. And the new chair has to have a view as to what the future economy looks like. I am a great believer, as you know, in the promise of AI. If we get diffusion right, we will have a significant productivity increase. And as a result, monetary policy will be able to be looser than it would otherwise have been.
Do you view the attacks on the Fed and what it does for the administration, will that leave lasting damage on this institution? And if you do think that's the case, what does that damage even mean to markets?
So I believe deeply in the independence of the Fed, deeply, that I think a Fed with policy autonomy is the best thing we can have. But I also believe, as you know, that this Fed went to sleep. There are many areas of reform that require attention. There are many best practices that from the rest of the world that we should be looking at more seriously. And there's lots of hard questions that we need to ask, including what is the right inflation target in a structurally changing economy. So the good news is you're starting to hear debate from within the Fed. You've had two federal officials, as you know, come out and saying, maybe we should have a range for inflation, our inflation target, not a point estimate. You've had another one come up saying we target the wrong intermediate policy variable. So I'm encouraged by the fact that the Fed itself is now finally talking about reforms. And that is something that, if you look at the 5 candidates on the short list, all of them understand that you need to reform the way the Fed operates. Otherwise, the Fed will continue to be behind. And if you look at the recent years, not only have we had decisions that were too late, but we've had a culture issue. We've had 5 officials that were accused of irregularities. So I think it's really important to reform this Fed. And what this political pressure has done is it has made certain Fed officials realize that it's better to reform from the inside than to have it imposed on you.
The 5 contenders you mentioned on the short list for the next Fed chair, do you have confidence that they will keep the Fed independent?
I do. I think all of them understand the history of central banking. They understand the importance of keeping the Fed independent, but they also understand that an independent Fed needs to be an accountable Fed, and an independent Fed needs to reform itself to keep up with changes. It is striking to me, Brian, that we don't have external members serving on the FOMC, like the Bank of England does. So we end up with groupthink, and that groupthink ends up by the Fed being behind. We saw that in 2021, 22, and we've seen it again this year. So there are things that can be done and should be done, and I think that all 5 realize that an independent Fed is critical, but it doesn't mean a Fed that goes to sleep on how it operates.
Do you think the 2% inflation target should be scrapped?
I don't think it should be scrapped. I think it should be changed. I have been of the view that a better inflation target is a range, not a point estimate. A point estimate suggests precision that is elusive. Second, that range should be higher than 2%. It should be the 2.5% to 3%. And what is undeniable is that we are at a stable 3% inflation, and that hasn't in any way unanchored inflation expectations.
Out of the 5 candidates, Mohamed, look, I agree with you. These are incredibly qualified people. Of course, shout out Rick Reeder, friend of Yahoo Finance. We all know him very well. What do you think their biggest problem they will have to solve? That first 6 months on the job of leading the Federal Reserve after a long tenure like Jerome Powell has had, like, what do they need to get right out of the box?
Shifting the Fed from an excessively data-dependent, backward-looking institution that is reactive to one that has the confidence to take a strategic view and be proactive. That's going to be a major change that is really needed, has been needed for a while, and that hasn't happened under Chair Powell.
I wanted to get back to what you mentioned on AI and productivity. You could see AI chatbots, at least for now, this current wave of innovation is already starting to drive a lot of productivity. How much of a risk is it to jobs around the world? How concerned are you?
I'm concerned mainly because of the corporate mindset, Brian. If you look at the promise of AI, there is a labor displacement risk, and there's a massive labor enhancing opportunity. And the worry I have that with the exception of a few companies, the mindset right now in corporate America is about cost minimization. AI is viewed as a cost minimizer. What AI really is an enabler, a productivity enabler that gets there from better work and more work. And I worry a little bit that the mindset is too focused right now on cost minimization, because the real promise of AI is not labor displacement, it's labor enhancement.
I told myself coming into this, Mohamed, I didn't want to be that guy that asked you about a bubble. I just think it doesn't capture the nuances it deserves. So let me, if I can frame it a little more academically, how concerned are you that AI stocks are grossly overvalued?
So let me share the work that I've been doing with Mike Spence, a friend and a Nobel Prize winner. We believe that we are in a rational bubble. So yes, there are elements of a bubble. And there's 3 elements in particular of this bubble. First, the frontier, those working on foundational models. Not all of them are going to succeed. And yet all of them are attracting significant investment. Second, diffusion isn't being talked about enough. Diffusion means getting AI into the workplace in an orderly fashion, in a comprehensive fashion. We don't have a diffusion policy so far. Other countries, China does, UAE does, we haven't. We've got to get diffusion right. Otherwise, the promise of AI is not going to be fully realized. And then you and I remember the dot-com era. We remember companies simply putting a label on what they do and attracting investment. Well, that label today is AI. So there are elements of a bubble, which means that people will end up with losses. But the aggregate value of what's being created is significant. And therefore, the rationality part comes in, Brian. It makes sense to take a venture capital approach to AI. The payoff is so large that it is rational to have multiple investments and to overinvest. So the good news is that it's a construct that will make us more innovative, more competitive. The bad news is there will be tears, there will be losses, because elements of it are elements of a bubble.
I wanted to leave Invest viewers thinking with one deep thought. And let me come at you with this question, Mohamed, before we get going here. If you were writing a short message to policymakers right now, one key action they should take, what would it be and why?
That realize that our future is going to be at the tails of distribution, not in the belly. You know, for a long time, we grew up with unifying themes, the Washington Consensus, globalization. We are now living in a world of fragmentation, in a world that structurally changes. And what happens at the tails are going to determine where we end up. So don't get fooled by a normal distribution, a bell-shaped distribution. Realize we're in a multimodal world.
Always a treat to get some time with you. I always enjoy our conversations. Mohamed El-Erian, Allianz Chief Economic Advisor. We'll talk to you soon. Thanks for joining us here at Invest. We appreciate it.
Thank you.
AI isn't just transforming tech, it's making its mark across industries. One industry already seeing change, payments and retail. We've seen the likes of Walmart, Shopify, Etsy, and Lowe's partnering with OpenAI to integrate AI tools into the shopping experience. Let's bring in a key name in this sector, Max Levchin, the CEO and founder of Affirm. He also co-founded PayPal, and he is a prominent venture capitalist through his firm, Sci-Fi VC. Max, so great to spend some time with you as always. Thank you for doing this, coming to us, I believe, from another country in London. So thank you so much. So
a country in the United Kingdom.
The United Kingdom. Okay, there we go. I appreciate the correction. So one thing we have not talked about, Invest, we've talked about how AI is impacting sports, how AI is impacting Bitcoin. We haven't talked about how AI is going to impact the shopping experience. So let us have it. How will it impact it?
You know, the jury's still out. It's happening right before us. And so it's a little hard to make perfect predictions. It is the case that we already live in a world of agentic commerce. So today, when you fire up your favorite grocery shopping app, e.g. Instacart, you're telling an agent to go buy things for you. You're trusting a human in this case, but doesn't really have to be a human, does it, to go and refill your fridge or get the food that you're fully trusting a quality control and a payment to occur entirely outside of your hands. And so as humans, we are prepared for a sort of fully outsourced shopping experience from the desire all the way to consumption, handled entirely by a system, maybe by machines. The thing that we're talking about now, I think the most interesting part of agentic commerce coming our way, is this notion of AI chatbot, presumably that's kind of the most likely manifestation, becoming a trusted partner in your research, which happens today. I speak with ChatGPT about all sorts of things that I may or may not buy later, closing that last moment of, all right, now let's go buy that. And the question is, how far are you willing to let control go, where you say, we've talked about, I buy a lot of bicycle parts, being my favorite other thing to do, ride a bike. Will I ever say, okay, robot, you go get me that bike? These things run very expensively. I take a lot of effort into figuring out exactly just what I want on my bike, in my bike. Will I fully let go? And I think we will gradually get there. Within payments, of course, the most important question ends up being things like, all right, so let's say we get there. Let's say you trust your chatbot to fulfill whatever it is that you've just chatted it up about. What happens when you don't like it? What happens if you're unsatisfied with a product? Who gets to bear the responsibility of the return, for example? Is it the chatbot that screwed up, or was it you? And so there's just a lot of really interesting questions that are starting to emerge in these conversations about agentic shopping. And of course, the more agentic, the more outsourced, the more the fuzzy the area of, well, okay, so you really have nothing to do with this purchase. You trusted an agent. Does this agent have a power of attorney that you gave it implicitly, or is it explicit? Does it have to be explicit? And so, we're at Affirm, obviously we're right in the middle of trying to think all this stuff through, but it's a fascinating new world.
Max, I'll just say, so this is kind of scary. I still like going to an Amazon or Walmart, clicking on a link and buying myself something. What's the risk of putting all our eggs in one basket with these agents? These agents sound like they're about ready to run amok on the internet if they haven't already.
Definitely going to go through some interesting speed bumps, I have no doubt. But you and me both. I very much like my local bike shop experience. When I go see a human mechanic that is a true expert, they will talk to me about the thing that I need, but also maybe enlighten me about a couple of things that I want. And therein, by the way, lies one of the more interesting puzzles vis-a-vis retail. So everyone who's ever worked in a store or run a shop, online or offline, understands a very, very important truism, and that is the second sale is the one you want. The first sale is the hardest. You need to attract someone to your store. You need to persuade them to trust you, to sell you the thing. You sell them this thing, and if you are good, if you really deliver a great service, if you deliver a great product, you can expect a returning customer. And that returning customer is what you want. In this sort of internet jargon, there's no longer a CAC. That first transaction, you must have advertised for it. You must have expended some effort trying to get this person to trust you. Once you have fulfilled the transaction once, the second one is much easier, and that's where the profits are made. And so in the world of agentic shopping, one of the things that we can anticipate is the relegation of the store to much more of a fulfillment role, where the chatbot is the one that helped you pick, which is great because it might create a totally new distribution channel for retail, and I think it will. But will retailer in question actually get that easier second sale? Will you know which bike shop online did you order that part that ChatGPT helped you select? And I think that's a question that is going to necessarily resolve itself over the next several, I was going to say years, but given the speed of AI, maybe months. But that is maybe the most important one. How will retail adapt to this new world where the transaction happens entirely or primarily inside the bot? I don't think local bike shops or Amazon or Walmart.com are going anywhere. I think many of us, myself included, actually quite delight in this process of interacting with retail, finding out what's new, seeing new products, being shown some things that I didn't even know existed. And so this discovery process is, that's part of the shopping that's entertainment. And so I suspect that's not going to go away. Agents aren't going to completely replace us in that process. But we are going to reinvent discovery. We are going to care a lot about what does this mean for the second transaction, third transaction.
For those retailers that can't adapt, Max, is the reality that they're just not going to exist anymore?
They're going to compete on price and fulfillment, and some retailers already compete on just those things. But I do think the world of shopping is changing rapidly, changing in ways that we have not seen before, we've not predicted. I think, adapt or be ready for a world you don't especially like. So I would encourage folks to adapt.
So yes, as someone that has been, I mentioned the intro, PayPal, I mean, you've been in the internet for eons, Max. Do you like what you see in AI? Is it being rolled out responsibly? Do you like the changes you're seeing on the internet, to the very foundation of the internet? Do you like any of these things, or are you worried about some things?
I'm sort of a perennial techno optimist, and so I'm also a computer scientist and engineer by training. And so to me, it's once again a playground of awesome new tools and building blocks to create new things. So I'm profoundly predisposed towards loving, like not just liking, but really enjoying what's going on. Affirm, my company, has been in AI in various forms of it, both machine learning, sort of the classical now known as classical AI, as well, of course, as some of the newer stuff. And so we built a business leveraging the latest discoveries in that domain, and it's done great things for us, for our customers, for people who borrow money from us. And so all this new technology that's coming our way, there is a good way and a less good way to use it. And it's up to the individual entrepreneurs and teams to put it to great use. And I think there are so many great teams, so many people that see a cool new tool, a building block, and say, that's the thing that I'm going to use to make my mark on the world, make so many lives better, just push us to the next place of abundance, success, etc. So I'm not worried, to be completely honest. For every bad actor, for every mistake, misbehavior, there are so many more people who are deeply motivated by just trying to make lives around the world better.
Is this generation of AI, Max, is it making the internet a better place?
I think so. I am, in a world of worries, the thing that I certainly expect, and again, I worry less than I think I expect and plan. The things like deep fakes, the sort of really indistinguishable from reality content that's generated to look real, but is something entirely not. It's a concern. I think we're going to need new, deeper, more serious forms of authentication. I think we're going to really care about verifiability. We're going to need to give people tools of detecting what's true news and what's being designed to sort of excite them into maybe behaviors that they won't be proud of later. And so I think that's the darker part that I spend some time on. But again, through the lens of an entrepreneur's mind, that's a great opportunity. So someone's going to build the next verification service to rule all verification services. There'll be an AI company to bring a mirror to some of the deep fakes and say, no, that's not real. In the world of augmented reality, I will have a pair of glasses that will allow me to look at images and videos and say, that's not real, that's generated. And so it's always easy to get scared and sort of try to look for a unelectrified dark cave from where you can finally hide from all the ills of society. But it's much more fun to imagine what tool you can bring to bear to combat the whatever darkness scares you.
I don't know what this says about me, Max, but my X feed is filled with robot videos. Elon posting robot videos of his own. Those seem to work well, but I've seen other videos of these humanoid robots trying to cook an egg. They can't do it. They fall apart, run into a mirror. I mean, some of these videos are ridiculous. Are you a big believer in the humanoid being a major contributor to the economy, and is it all coming for our jobs?
I don't think it's coming for our jobs. I think, so I'm a huge believer in this notion that AI and embodied AI is a collection of tools for us to lead better lives, to do more. We're all going to be smarter because these systems have PhDs on any given topic. They can educate us, they can bring us along, they can help us be more decisive. Once we get to robots that can cook an egg, which I think we're a few steps away from, just because it's a much harder problem. Bits are inherently easier to manage than atoms, and we're a little bit farther away from managing atoms. But we'll get there too. It will open up our world to do more interesting, more intellectually stimulating jobs. And there will be someone who will lament the loss of their manual labor. But I think it's pretty similar to sort of, it used to be real. I would hammer a piece of metal with my hammer, and that was real work. And now we have these machines that just do die cutting and casting, and that happened a couple times in history, and we've always done better for ourselves as a species. So I'm not at all worried about the loss of jobs. I do think the robots are coming. I would definitely invest a few serious cycles into making sure we don't end up in the sort of a Skynet universe. Not so much because the robots will evolve consciousness and want to kill us all, but because there are plenty of people out there who would want to wreak havoc by breaking into these robots' operating systems and doing bad things. So security is important, safety is important. I think we're going to solve those problems.
I wanted to get some thoughts on leadership, Max. You and I always talk about earnings. We got shot of accounting. We talk about profit margins, but we could talk about some leadership things here because we are at a all-day event. Here's one for you. You've seen the evolution of tech from the early 2000s to now. What would surprise your younger self about the world today?
I think one of the more important traits in a leader, and certainly in a technology entrepreneur, is you can't ever stop being surprised. as I try to make a mental list, like the question isn't what surprises me, it's sort of what surprised me the most today. There's always something unbelievably cool going on. I just saw the news that Waymo will take me from San Francisco to San Francisco airport, which I couldn't do 2 days ago. It's like the greatest thing ever. I love Waymo. It's like the robot car that gives you full privacy, and you sort of ensconced in the back and, you know, feeling like you're in a clamshell just traveling the world. Now it can take me to my next flight, which is so exciting. And I did not, so when I was in college, my roommate was involved in a project to do a self-driving car through the desert somewhere. And there were no roads, but also no real obstacles, just drive. And they drove for like 6 miles and the car crashed and it was terrible. And I remember thinking, man, like, will we ever have self-driving cars? We have self-driving cars that can get on a highway, get off the highway, deal with the airport traffic, drop me off to my gate. Like, that's amazing. And tomorrow will be something else that'll just blow my mind. And like, you have to have that willingness to just have your mind blown every day, because that's when you also find ideas like, well, you know what would be cooler if we built that, and then you can build it.
Max, are there any pivots in your own career that stand out to you as particularly meaningful?
My most important pivot was pivot back. Yeah. Stop me if you've heard this one before, but so obviously I sort of lucked and or maybe worked my way into this PayPal thing that Peter Thiel and I started, and worked with some really great people in the process, and sort of defined myself as this financial services entrepreneur in my early 20s. After the PayPal journey was over, the one thing I told myself is I'm not touching financial services ever again, because how can I possibly beat that? The Sophomore Act cannot be comparable to the Freshman Act. It'll never work. No more financial services. And I meandered through the desert of anything but financial services for a number of years. And I managed to start a company that Google acquired, so I wasn't entirely successless, but it was a bit, you know, I sort of cut myself off from the very supply of the drug that apparently fuels me the best. So when I begrudgingly decided I'm going to go try to build another payments company in credit, as it happens, it took me a year to fully commit. Sure, I'll build it. And my wife, who is much smarter and in most ways much better than I am, said, just wake up, man. Like, you are good at financial services. You foam at the mouth about the excitement of doing fair credit and underwriting and compliance problems you're going to have to solve. Like, no one is as boring as you, but you love this stuff. Go build it already. And so I started Affirm. And of course, it's been 15 years and I love every moment of it. And it's been amazing. Company's been quite successful, obviously. But the pivot back, thanks to some very not so gentle pushing in my family, has been the best.
Lastly, Max, am I wrong to think if you weren't doing Affirm, if you weren't in tech, you would be spending most of your time in biking? Like, what do you do outside of this gig?
I train as if I'm just about to go off and ride the Tour de France, which has not happened, but hope dies hard. You and I share a passion for fitness and a certain degree of obsessiveness around the right kind of vegan proteins.
Yeah, I'm actually a couple Hyrox gel packs into this day. We're going to keep it coming, though. Got a long day here at Invest. Max Levchin, thank you for your thoughts on Affirm, robots, and I'm glad you don't think the internet's falling apart. We appreciate it. We'll talk to you soon. One platform that has become a beneficiary of retail investor dominance is eToro, the sponsor of Yahoo Finance Invest. The company saw its assets under administration grow 76% from a year ago to $20.8 billion in its third quarter. It has more than 40 million registered users across 75 countries and debuted on the NASDAQ in May of this year. Let's get right into the future of the retail investor with Yoni Assia, eToro co-founder and CEO. Yoni, I think I just saw you at the IPO down at the NASDAQ.
Yeah, we had a great interview, and it led to eventually us sponsoring this great event.
Well, thank you so much for your support. We have to redo our outfits. Did you see that last segment? That was wild.
Yeah, we need better clothes.
So since we last spoke, look, the Dow is now at a record. Like, what are you seeing in the retail investor community at this point?
I think, we are just at the beginning of, again, the largest transformation of wealth in history, where our generation, Gen Y, and even younger generations, Gen Z today, have discovered that their fiat money devalues over time. Probably, with the widest knowledge of an understanding of inflation, which means that your money in the bank loses its value over time. and you need to invest that money somewhere. And I think people across the globe, here obviously, 60% of households are exposed to the stock market, but in Europe it's 10%. People understand now and are discovering you can generate double-digit returns investing in the stock markets. They're finding out about crypto. 400 million people now are investing in digital currencies across the globe. And I think this new generation talking about their investing on social networks, on eToro, looking at other people's portfolios, which is a unique part of eToro, where you actually see millions of accounts and you see their performance over time from different countries investing in different stock markets, not only the US stock markets, but global stock markets from Asia to Europe, realizing that if you learn how to invest in the markets and you learn how to compound wealth over time, you'll significantly improve your financials if you start doing that when you're younger.
When you are one of the most passionate founders or co-founders in this game, I've always loved listening to you talk, love the story behind eToro, but for those not familiar with your personal story, when did you found the company? What has driven you to take it to this point? Where did you come from?
So born and raised in Israel, but I started trading when I was 13. And my father was actually CEO and founder of also a NASDAQ-listed company. And we've always been passionate about capital markets. We found the company 18 years ago together with my older brother. And we looked at the world of investing and we said, we need to simplify this world. We need to make it simpler, to open the markets for everyone to trade and invest in a simple and transparent way. That was our statement from day one, 18 years ago, until today, until the IPO. And we're very excited to see now millions of people, tens of millions of people that we've helped access the global markets. And across the globe, we realized it's really about helping people get more familiar with the markets, trust more capital markets, educate themselves. And we did that by building a social network where people can actually see other people, how they invest. Everybody automatically shares by default their portfolios on eToro. So somebody joining eToro from France or Italy or Spain or here in the US can see like-minded individuals and how they're generating performance over time. And then the unique part of eToro is our technology that enables you to automatically copy the top investors on the platform. Because what I've learned across the 30 years in capital markets is investing is simple. You can just buy an S&P 500 ETF.
And go to sleep.
And everybody should learn how to invest in the markets. Trading, on the other hand, it's like professional sports. That you need to invest a lot of time, a lot of effort to become a good trader over time, to beat the indexes over time. And by opening this up, opening a community of very smart investors and traders that can learn from one another, we're actually helping people become better at that professional of trading, at that profession of trading.
Where do retail investors go from here in 2026? What's the next big thing?
Well, I think it's definitely AI. Right? We were very early on to crypto. We started buying Bitcoin at $5. Vitalik was in eToro's offices, inspired by our colored coins about tokenization of assets before starting Ethereum. So I think there's now sort of two parallel tracks that have a lot of connection between them, which is tokenization and all assets becoming digital. And retail investors and generally the world of investing becoming significantly more powerful through AI, through intelligent investing. So when I started trading, I was always around, so how do I build software? How do I create algorithms to trade the markets? But it's very hard, it was very hard to create quantitative strategies, to be 24/7, to build the software that can monitor the markets 24/7, what's happening in the markets and manage your portfolio. And now what we're seeing in eToro, we just launched our app store and an AI studio for our investors where they can actually vibe code, so you can just write in natural language. Wow. Basically, and we saw some of these apps that are pro investors started developing, and they're like, build me the Warren Buffett and Benjamin Graham, like the fathers of value investing. I want their personas, read everything about them on the internet, and I want Benjamin Graham and Warren Buffett to comment on my portfolio, and I want to talk to them about my portfolio. And then I want to rebalance my portfolio based on their insights. And you can use it, the best investors in the world, because again, AI knows the best investors in the world. It read all of their books and all of their information, all of their memos, and you can suddenly have in your hand of a retail investor technology and power that was available only like to the top quantitative, most sophisticated hedge funds here in New York. Suddenly a retail investor has access to all of that information, data through eToro. So in eToro, when we provide our Tori, our AI analyst, it has access to see your portfolio. So you can ask what happened yesterday in the markets and how does it impact my portfolio? What are other people doing in their portfolios today, right? So it has access to all of that information and super powerful. Now, if you connect AI now to digital assets, which means all assets eventually become digital, smart, 24/7 tradable, right? So capital markets are now copying crypto markets, moving to 24/5. And the ability to become smart contracts, right? So AI can then interact with those digital assets. I think those two trends are going to shape and completely change financial markets for retail investors over the next 10 years.
Lastly, before you go, you just mentioned Warren Buffett. And if I'm right, you had a dinner at Warren Buffett a while back. Warren Buffett's getting ready to, I guess, go quietly, as he just said as an investor later. In our time, do you think there will be another Warren Buffett?
I think we're seeing on the eToro platform a lot of potential Warren Buffetts. So we've just had our annual investor summit. We met a lot of our top investors from across the globe. One of our top investors went from $50 million copying him to $250 million copying him just over this year. And he's consistently beat over the last 5 years the S&P 500, generating an average of, I think, 29% returns over the last 5 years. The second one with $162 million has generated about, I think, 31% returns in a tenure of 12 years on eToro. So I think you have a lot of great minds out there that are consistently generating returns in the markets. And again, in his letter, he said, find your heroes and copy them. So that's what we're trying to do in eToro, let you find the heroes and copy them. And there's no doubt that Warren Buffett is a hero of capital markets and educating people about capital markets.
Well said. Yoni Assia, eToro co-founder and CEO. Above all else, thank you for the support of Invest. I've always enjoyed following your story. I enjoy following your company, and I greatly appreciate it.
Thank you very much.
Thank you much.